Hey everyone, welcome to the KE Report, a daily editorial, pre-market daily editorial for Wednesday, August 27th, chatting with Darrell Fletcher. Darrell is a managing director of commodities at Bannockburn Capital Markets. He runs the trading desk, the commodities trading desk. I bring Darrell on every month to get a bit of an overview of what he's seeing trading-wise, hedging-wise within the major commodities. We always talk energy, oil, natural gas, as well as base metals, focused on copper, and a little bit into gold. And Darrell, I have to say, overall, this month is kind of boring, really boring, actually, for the underlying metals prices. There have been some moves in underlying equities, but sticking to just the energy or base metals or precious metals pricing, not much is happening. It's slow trading. That is seasonally what we see here in summer and at the tail end of summer. So, from a commodities trading desk standpoint, do you expect this? What do you usually do, or what do you see over these slow summer periods?
Yes, thanks, Corey. It has been kind of a summer blues, especially the past 2 or 3 weeks. But that's common. I mean, typically on the desks that I've been on, you have 1, 2, or hopefully not 3 months, June, July, August, that are typically slow. But I think it's setting up for a very interesting end of the year with traders coming back in and a lot of dynamics and risks that are still out there. So I think everyone's getting their last 2 weeks in here, and I think it's really going to start to pick up fast. Yeah, on the month, it's been really flattish. If you look at the broader commodity index, like the Bloomberg Commodity Index is down about 2% on the month. All that pull down has been in energy. Natural gas and crude keeps grinding lower. The base complex, like LMEX and the base metals, really pretty flat. Copper has settled in from the fireworks at the end of July, and it's kind of settled back into that 450 range. It looks steady. Precious metals, gold, as you know, has been consolidating, but I think it finished the month up a couple percent, and mainly the end of last week with the Powell speech. Silver kind of flattish, PGM's lower, but all this despite the dollar's kind of consolidating up a little bit on the month, but I think we're just setting up for what will be an interesting fourth quarter. I think you're going to have the last 4 months will be interesting, and you also have we talked about this before. A lot of, especially on the consumption side, are starting to set up their contracts for 26 if they're not already into that cycle. And so you start to see a lot of decision making come in here now on setting some prices for 26 and forward hedging. But it's going to be interesting. Traders will be coming back in. You've got the Fed cuts that, well, as we know now, are at least 2 or 3, and then challenge of the independence, the tariffs that's not going away. So there's still a lot of macro risks. I think it'll be an interesting movement towards the end of the year.
Okay, so those macro risks, yes, those are still around. As much as the market seems to be ignoring kind of the chaos out of the White House, we still hear from a lot of companies that it's hard to plan for what's coming. Before we get a bit more into the underlying metals and different commodities, this US dollar weakness. The dollar has been weak pretty much all year, seems to try to rebound and bounce, but then seems to break to kind of lower levels for the year. Do you see this continuing? Do you see the US dollar weakness continuing? And that usually does carry over to better commodities prices.
I do. I do. Yeah, it's really consolidated in the past month, very similar to the gold action. But I mean, the longer term trend, I don't see why it would change. And it's interesting. I think we might have talked about this earlier, prior get together, but you have the best correlations obviously around the precious space, obviously with gold being the pure play. And then base metals are probably next, but that's muted. Although the LMEX complex is basically reflecting that 8-9% move higher this year. And then as you get into like crude and natural gas, because we cover a lot of this, it becomes the fundamentals are much more important. So especially, I mean, natural gas is completely fundamentally driven now. But as far as the dollar goes and gold, yeah, I think that trend's gonna stay in place. I don't see reasons to move it.
Okay, let's start off with base metals then. Copper. You already gave us a little insight of what you're thinking, but look, copper is Dr. Copper, should be a barometer of the economic health. We have seen some weaker economic numbers out of the US, but we also have seen inflation start to pick up. What do you see as driving copper through the rest of this year?
Yeah, you have some offsetting factors. The economic data is going to be really interesting, but I think copper has settled down, specifically the COMEX to LME spread, obviously from that big drop. That all flushed out very quickly. We at this 450 range, and the market's still in contango. So, you're getting into the 460s, 470s, 480s going out. You've had a good year. If it settles up here in this 450, a little higher range, that's going to be, I think, really supportive going forward, just given the fundamentals. So COMEX front month is up 11% year to date now, and LME 3 months actually up 12%. So they've caught up. There's about a 4 or 5 cent premium, which is pretty normal. But speaking of catch up, and you covered this a lot with some of your other guests, the stocks have really caught up. If you look at copper and gold stocks in the past month or two. So I know you guys covered that closely. It's surprising. But not surprising. I guess that catch up makes sense. It's just that maybe that it took that long to lag in. But I see copper prices pretty stable, and it'll be interesting to see if it can hold this position as we get to the towards the end of the year. The non-commercial net long positioning, given the move in COMEX specifically, is still pretty healthy. So I think that's positive, and the contango on the curve is positive for copper. And then if you get into the other base metals, like I said, copper's up 12%, tin's up 17% year to date. And yeah, I mean, I think it's stable and it'll follow dollar to some extent, but I'm looking for the fundamentals and economic news to start to really take more control of the base metal market as we get into fourth quarter.
Okay, let's go to those stocks. I was going to save it for later, but you brought it up. The copper and gold stocks are outperforming what the metals price is doing. Now, we can look at this two ways. One, it's either the catch up trade because these stocks underperformed as the underlying metals prices went higher, or two, new interest is coming into the sector on a bit more of a aggressive risk on sense that goes down into the stocks rather than playing the underlying metals. How do you see it? What's the balance here?
Yeah, I feel like it's a catch-up move. It's really interesting. I look at the COPEX index. I think that's up. Was I looking at this earlier today? Like, is it up like 9% now year to date? And then like Barrick is just flown higher, 22% in the past month. So it's definitely a catch-up, and it seems again, it seems to be that this commodity space in general, however you want to play it, is becoming a bigger part of the general investment portfolio across many factors. So I think that's part of it. It's been interesting. The move in equities, because I know months ago we talked about how it was lagging, but it looks like it's finally caught up.
It really has. And it's even been some of the smaller companies also playing catch up. Again, money has come into the sector, and I think it's even filtered down. You made an interesting comment there that maybe, and it is a maybe, commodities or metals are being featured a little bit more in portfolios, or at least included there. You have any data? You have any clients that give you the heads up that this truly is happening and that this could be a sustainable move?
Yeah, nothing specific around clients, but I think it just kind of makes sense if you look at equity valuations and again the big macro risks. Some of these companies cash flow really well. The longer term outlooks I think are positive. So I think it's just becoming naturally a bigger part. Or maybe, it should have happened a long time ago, but there's just some broadening out in these portfolios to have more commodities in them, however that may be.
Interesting. That could be a big change for the sector because, boy, oh boy, we hear it across the board is that just if some of the generalist investors get in, some of the other money that's in all these other sectors comes into the metals or commodities, then it can really make a difference. Let's talk energy markets because, well, unfortunately, those continue to drift lower. Oil has been really boring in the low $60 range, and nat gas that's been a pretty big loser this month. And I keep hearing from some of our other energy guys that it's just been a mild summer, and that is very impactful for the natural gas price. But look, do you see either of these, oil or natural gas, being able to break these downtrends?
Yeah, I kind of have opinions on both. Oil, I've kind of been bearish to lower all year, and it's remained there. It can't get any traction. I think front month WTI is down 3%, year to date about 11%. There was an interesting note the prior week on the net long managed money positions being at the lowest level since 2008. That's interesting. So it just can't get traction. You're still in backwardation. I still think it wants to push at least the front towards 60 to test the 60 mark again and flip this thing into some contango. There was also a very interesting note last week where the IEA basically reiterated what everyone's been talking about, the bearish forecast with a supply glut globally. One of the notes they had talked about inventories accumulating at 3 million barrels per day by the end of 2026. And that kind of overage we haven't seen since 2020. We know what created that overage. So that's interesting. And again, OPEC plus production, the increases have been accelerated in the general trade war, economic growth slowing story. Those are kind of your bearish factors. Bullish factors, things that have kind of held this up, at least on a North American basis, would be the summer fuel demand's been good. It's been really strong. So you've had some good demand, and you see that in gasoline and diesel prices. But, summer is over. So that's going to start to wane. The geopolitical stuff just kind of keeps dragging on. So I could easily see this front flip down, and we fall into a tangled market and then try to test that 60 level.
So in terms of managed money, as you mentioned it there, carry that over also to any of the commitment of trader reports. Is it fair to say that people just aren't really paying as much attention to the energy sector, or do you see them as leaning one way, either bearish or slightly bullish?
I think it's bearish on oil. I think it's take that risk off. It just, it doesn't have a lot of support here in the front other than just summer fuel demand right now. So again, it's going to keep grinding here. It can't get any pickup really. We had to move up on, like, was it Monday? Monday was a late trading day because it's August, plus it was a London holiday. We had a little move up and everyone was like, well, the only thing that was a continuation of, the weaker dollar from the Friday speech. There was nothing else out there to move it, and it's come right back off. Yeah, I'm bearish to range at best.
Yeah, that's been your kind of consistent outlook for that, and quite frankly, it has continued. So we'll see if anything changes that maybe in the back half of this year. But a lot of the data that I'm seeing too still points to maybe a bit of an oversupply heading into next year. Let's also talk gold then, because gold has been boring now for 5 months. Really hasn't done anything, hasn't made a new all-time high. I've been on record saying that I really think to keep the bull market going, we do need to see another leg higher in gold. It's encouraging to see it holding around close to these record highs, but again, going sideways only works for so long for these stocks, especially now that they have played catch up. Anything within the gold market that you're seeing that could point to a breakout to some all-time highs in the near term?
Sure, yeah. Getting back to my points on fourth quarter, if we get into September, October, I think it's going to be interesting. There's a lot of macro things that are out there that might, in my opinion, are kind of being undervalued. A lot of the labor statistic reports that are going to come out here in the next month or two are going to be interesting. The challenge of Fed independence and rate cuts. I just think the macro risks are higher in in commodities, especially like this move in gold has been very impressive this year. But the longer it stays in consolidation like this and doesn't retreat, it tends to be a leg up after that. I don't see a lot of reasons to sell. I mean, a lot of people would say, I'm not a technician, but it's made this move up. It's got to correct, but it doesn't. If you think about how long, what have we been in consolidation since May? The longer it stays at this new level, you kind of think it's going to push higher. There's a lot of macro risk on the table, and I think they're being undervalued at this point. And that's what is going to set up for an interesting fourth quarter.
Now, is it all geopolitics? Do you just continue to see that as being a major driver? With gold, it usually is, but quite frankly, it's just been interesting to see markets pay less attention, at least the broad averages, to some of the trade war rhetoric and just really what is coming out of the White House. But commodities have been moving a little bit more, and quite frankly, it is the main story to hold gold up here and the argument for another leg higher in gold.
Yeah, I mean, I think you mentioned this earlier. This most of the gold story has been the weaker dollar, and you need like another catalyst at this point. But there's plenty out there that could trigger this higher. And again, I think when something makes a big move up, and then just sits there and consolidates, it's like, okay, it doesn't want to move lower. You're going to still have a weaker dollar. You've got a lot of macro risks out there. I don't think the tariff rhetoric, whatever you want to call it, it's not going away. So yeah, you know, that seems to be part of the playbook here. So I think that's going to be continuous, and I think that's supportive, for gold, just the unknowns.
Yeah, I completely agree with that. And that is why I think we continue to see central banks buying gold and being very supportive of the price. And fact of the matter is that this all can change. Maybe geopolitics, it can dissipate some of these worries, but just doesn't seem like it's going to anytime soon. So, Darrell, what is kind of the big theme as we're going to finish off this year? We're in the back half. It sounds like you're expecting stuff to get a lot more exciting and potentially some uptrends to being developed. Talk to us about the big theme that you're telling clients.
Yeah, I think the big thing we kind of go through like the big pieces, like the LMEX, base metals, precious, crude oil. Again, I think you hear my consistent thoughts on that being bearish, and natural gas. I mean, another one we can touch on is natural gas. That was one that sold off sharply in August, but I feel like that's been flushed. We're in a shoulder season now. I feel like the risks on natural gas are balanced now. I mean, it was overpriced because the storage catch up was so quick this summer. It's very impressive storage catch up in the States. And the weather has cooled quite a bit. And so we're taking cooling degree days off. So you flushed out, you're down about 26% year to date on the front month. You have to be a little careful with that when you go to year to date because you're looking at Feb to Sep. But a better indicator is the winter strips off 13%. It's down at like $3.65 for an IMEX basis, and Cal 26 has fallen to 380-ish, and it's actually taken the curve, has has rerouted into like a more normalized contango curve where 27's trading over 26. So it looks very balanced from here. You're in a shoulder season, so if this front can hold its 270-ish, I think you could go either way on this at this point, but I kind of feel like it's balanced.
Okay. Darrell, as always, thanks for taking us through what you're seeing on the commodities front. And Darrell Fletcher, Managing Director of Commodities at Bannockburn Capital Markets. We'll be chatting with Darrell again at the tail end of next month to get any updates he has, what he's seeing from the trading desk, and any other trends we can talk about within the metals and energy sectors. Darrell, thanks as always for your time, buddy.
Thanks, Corey.